Metaco Talks. I'm Seamus Donahue, the VP of Sales and Business Development at Metaco. Metaco Talks, for those that are new, is a bi-weekly discussion on topical issues and thought leadership related to cryptocurrencies, digital assets. It's live streamed. It's meant to be a lot of an interactive conversation, so please comment and ask questions, and we'll try to include those in the dialogue. The recordings after the call, after this live stream, can be found on our website. They're also available on YouTube, Apple Podcasts, and Spotify. So please also subscribe so you can join future events. And if you like what you hear, please also leave a review. Today's discussion is around building an investment thesis in Bitcoin. Quick disclaimer: this is not investment advice. Please do your own research. But onward, I am pleased to welcome Mike McGlone here. He is the senior Bloomberg Commodity Strategist and author of the monthly Bloomberg's Crypto Outlook. Welcome, Mike.
Thanks for having me, Seamus. I appreciate the dialogue, and I'm looking forward to meeting you in person sometime.
Likewise, it'd be great to do some of these events live streamed and in person. So, we talk to many banks, and I think that we hear a lot of pushback sometimes about, is this an asset class to start with, and then is it an investable asset class? Obviously, there's been a lot of the narrative of the last year has been institutionalization, which seems to be accelerating as we've gone into 2021. Would love to hear how you got into this space. I often think did you draw the short straw at Bloomberg because somebody had to do it? And what's the background that brought you to this space?
Well, the immediate at Bloomberg is that I came here in 2016, Commodity Strategist, and I've always been somewhat intrigued by Bitcoin. The first time I heard about it was from my eldest son, who's now 27, about 2012, and he was all over it. I don't think he's bought a little bit, but not a lot. He tried to mine some, and I remember it was just silly internet money. So I'm a classic zealot that's been converted. Just like anybody else, I didn't really believe it too much until, I remember it peaked around the price of gold in 2013. At the time, I was running the commodity business at S&P. I'm like, okay, it's done. It's silly net money. But once beginning in 2017, it started to peak above the price of gold. I'm like, okay, this stuff's serious. I started covering here 2017, got really bearish, made a lot of enemies because I was really bearish 2018. And I turned bullish around April 2019. And one of the key inflection points for me was when the New York Attorney General came down on Tether, the world's largest stable coin, and the market didn't care. I said to myself, was like, hey, it's a classic sign from a strategist. When the market don't care, I don't care. And that's when I started turning really bullish on Bitcoin. And then all the fundamentals have kicked in, and here we are. And I want to thank you. Your timing's impeccable because right now, as we speak, we're at an all-time high. Now, if I had known we'd set this up a few weeks ago, I would have been very impressed. And we're within a few ticks of the $1 trillion market cap.
Yep.
You planned that, right?
Absolutely. That's all part of the Metaco Talks. I mean, I think the $1 trillion is an interesting story because it really, one of the issues that, evident issue is a very small asset class. It's still relatively small, but it's getting bigger. I mean, we're still a long way from the 10 or 12 trillion that the gold market is. But I'd love to hear, obviously, since you've been watching this space for as long as you have, how has your analytical framework to look at the market changed? I mean, and where is it now, and how do you think it's going to evolve going forward?
Well, let's start with one of the key indicators that got me really bullish last year. That was when volatility on Bitcoin was going down, and volatility in every other risk asset in the plant was going up. And Bitcoin locked in around 10 grand. Yes, it had its correction and then came back. But I look at it from an institutional kind of, I guess it's a more professional standpoint, that was a key indicator. Also, if you looked at volatility on Bitcoin, let's say 260 days, so annualized, dropped to the lowest ever versus the stock market versus gold and versus the world's most significant commodity oil. I'm like, okay, that means something from a professional standpoint. And of course, the market's kicked in since. So that's a pretty solid foundation. Now, bit volatility is starting to pick up as the market breaks out to new highs for good, solid reasons, and it should. But I like to start there because if I look at longer term trends in volatility in Bitcoin, it's going to match gold in about 2024, which is the next halving. It's simple regression analysis of 260-day volatility. And then there's a key fundamental reason why. Bitcoin supply is fixed. It's a known. We know until 2024, there'll be 900 coins a day, and that's it. No more. There could be less if there's a glitch, but no more. And then it drops to 450. So one side of that binary model of supply and demand is known. The only thing that matters is demand. I look at every other commodity on the planet, they're both unknowns. So to me, that's a good reason. As you mentioned, once the size of the market gets much bigger, it'll become, I think, a store value asset like gold, but it's not there yet. The volatility is too high. That's true, but it's getting there. And the point is, what's going to stop it and trip it up? And at this point, we know the trends are clearly positive. And that's a key thing I think a lot of people miss when they say, like, oh, it's too volatile. I'm like, sure, it has been if you look past, but if you look to the future, it's going to be very much like gold. In fact, it could be more valuable than gold.
That's an interesting interesting framework, because I think often we do hear it's too volatile, but also the potential investment return is a function of the volatility here as well. I mean, the opportunity is part of that. And you know, so when you say you mentioned basically it could be more valuable than gold, how do you view the evolution of that? What's the time? What's your kind of like forecasted timeline for this type of move?
Let's put it simplistically. Let's put some numbers on. So right now we're right around 53,000 US dollars. That was my initial target this year to get to 1 trillion. Last year, my initial target was 14,000. That was another story. It was very easy. It was another story. But to me, this is the kind of year we typically get. Let's put this time. The last time we had a similar year, the year after a halving was 2017. The market went 15x. So going 4 or 5x this year means nothing. Then I analyze what's changed. Yes, the market's bigger, but supply is less. Demand's picking up, and the macroeconomic situation is almost unheard of. We know what's happening on a global basis is everybody's going digital, away from cash money. And it's just that trend in terms of QE, negative interest rates in Europe, low and massive fiscal stimulus. So to me, there's no reason I think we shouldn't just keep similar pace, get near 2 to 3, maybe 4 or 5x this year, which is around 100,000, and then we look for backup. So from these levels, I don't know how much much it should back up, but it's clearly almost a perfect storm for higher prices as everybody jumps in. And is it FOMO? Maybe. I mean, I think I will rope in the fact that the world's most significant car company in terms of market cap is allocating some of its wealth to Bitcoin. To me, something you're supposed to say, yeah, that makes sense. To me, that's as significant as when Tether and NYDA came down in Tether in 2019 and market said, I don't care. So to me, it's a big potential inflection point that's kicking in. And as far as why, I like to go back to the British Museum. One of my favorite exhibits there is when you go to the hoards, the Hoxne Hoard. I probably pronounce it right as an American, but it's that hoard of gold from when the Roman Empire was collapsing, and whoever owned that, he couldn't have a servant do it. He had a box of precious metals. He had to go out and dig it and bury it. You have a servant doing it. The servant can come back and find out where it is. So he probably had to go bury his stash and never came back for it. That concept of storing value over time in some place that's safe and transmittable and transportable is eluded man since the beginning of time. And to me, like the internet, Bitcoin is revolutionary. And the big thing about the history of mankind is when you invading armies from Alexander the Great, the conquistadors, to the Nazis come in, they take the gold, right? But you can't seize Bitcoin. And yeah, there's just no better way right now to store that value over time. So the key thing I want to end on, and we move on, is Bitcoin is not a currency. And I have to point out that is Satoshi Nakamoto's mistake in a good way. It's a global digital reserve asset in a world that's going that way.
Based on that global sort of characteristic, is the gain in Bitcoin the loss of gold, or are we in a situation globally where you have this excess liquidity that's sitting in cash that still needs to find a home, and you've got fixed income rates? What's the number now? Somewhere between $15 trillion of fixed income at negative or pretty much zero rates.
Yeah.
Is this broader asset class of store wealth going to grow as well, or is it just a zero sum gold versus Bitcoin?
Right now, the gain, the way you started, is completely clear and factual based on the evidence that the gain in Bitcoin is the loss in gold. Right now, it kicked in really around Q4 last year, and you can clearly see outflows in gold ETFs and inflows in anything to do with Bitcoin, and it makes sense. I hear it as I've been in the gold space for probably 12, 15 years, and I hear it from all the people I used to speak to in the past. Here's a good little story. My mother-in-law is a war bride from Germany. She was a child when her father, who was in the German army, died, and in Russia, and so always like gold. And I remember during Y2K, her and my father-in-law bought a lot of gold. And when I saw her over Christmas, her quote was, "Mike, how do I buy Bitcoin?" So to me, it's just clearly what's happening. And she's like, yay high, she could kick my butt still, old German woman, but wonderful. But to me, that's what's happening. Anybody who's allocated to gold through the centuries know now that there is a major competitor here, unless you expect the world to go backwards. I mean, it's going rapidly. We're in that acceleration stage of gradually then suddenly. It's clearly in terms of technology going digital. So my thought is anybody who's prudent and has been allocating to gold through the centuries, and more recently, I've always liked gold, knows they have to have Bitcoin in part of that bucket, if anything, to be a prudent allocator. Now that's happening. We've seen it in US-based equities. Now let's think of the rest of the world. You don't have the global reserve currency. And a classic iteration from that are central banks. Central banks are some of the most prudent people on the planet. At least I respect economists. I work with a lot of them here. And exactly. And I bring that particularly because that's going to be controversial to say that. But the biggest buyers of gold in last few years, most notably 2019, maybe not so much 2020, have been central banks. And of course, China, Russia, and maybe not the US. But having that store of gold, I remember seeing it downtown in New York, biggest stash of gold in the world. I remember holding some of those bars. If that gold is diminishing in value because this other asset is increasing in value, it's prudent to allocate a small percentage to that asset. To me, that's what's kicking in this year. Bitcoin has became prudent last year. That was one of our headlines. I republished on it this year. And it's just prudent now to have a partial allocation. So let's say you have 100 units of investment. You put 1 unit into Bitcoin. Makes sense. Bitcoin goes up 10x, then you're already overweight. But what if it goes down to 0? Doesn't matter. The point is it's far past that now, potentially going to 0. It's been adopted on a global basis. And that's a unique thing about cryptos. There's 8,500 of them. I call them Bitcoin wannabes. There's Ethereum that matters, but they don't go to 0. They hold their value, unlike a stock that goes bankrupt or something. So this is a major revolution at the moment, and my job is to just try to quantify it and qualify where it's going.
That's great context. So you've touched on, obviously, the maturity evolution of volatility, and now we talk about relative to gold. How do you look, let's say outside of that? Are there on-chain, or let's say on-chain analytics, or not on-chain, on-chain factors you look at, or crypto market pointers that you look at that really drive your thesis as well, or drive your analysis?
They have in the past. I've watched one of the best, I think most robust high correlation metrics I've watched in the past is addresses used. I get that from Coinmetrics, and I use a bit of, it's a 30-day average I use, and it was one of the key things that kept me bearish in 2018, and key things that kept me bullish since 2019. Now, I've somewhat ignored them a little bit lately because the market's in such an overwhelming phase where, as a strategist, you have to say, okay, when Tesla allocates, and Michael Saylor and MicroStrategy are buying, and the whole and open up accounts like PayPal, and the market's waiting for an ETF. There's an overwhelming demand at the moment. So I kind of pulled back a little bit on watching things like addresses used, but it's one of the key metrics I like to watch as the market is a good indicator last year. And I can share my screen on some of these if we'd like.
Please do.
As we speak. Sometimes it's better. I think it's better if some of our viewers don't look at my bald head or can't see my bald head and see a few charts. So I'm just showing you here one of the key metrics I used last year in white. That's just a 30-day average of addresses used. It was a major plunge in 2019, and once it broke above this level, 2019, it's been bullish. But it depends on how you scale it. I scale it in many different ways. But that to me is a key thing to watch. I watch things like hash rate. I think hash rate's a big significant thing. But one thing I also want to show you is when you look at the entire market, you have to be careful about the broad market. And that is, there is just so many of them that I like to scroll down to just Bitcoin. And that's what I show you in this chart here in white. That's the change in, there's basically 8,400 cryptocurrencies, tradable cryptocurrencies.
Wow.
And we know the simple rules of economics as ex-traders, moving from lower left to upper right, prices cannot sustain that. So, but an index like we have the Bloomberg Galaxy Index. It tracks 10 to 12 of them. An index will have a survivor bias. For instance, it initially kicked out XRP. And to me, that's an important way to track it. Say people say, what if there's a Bitcoin rival? Well, proper index will measure that problem. But to me, this is part of the reason I can't be bullish the whole space. Way too much supply. And it's one of the arguments people oftentimes use. There's just too many of them. Like, I agree. But there's only been one adopted globally and only one that's really considered digital reserve asset, and that's Bitcoin. So that's one of the things I watch, and there's plenty of things on change that I use, but those are some of the key ones.
That's interesting, because there's definitely, you hear some of the criticism is that there's unlimited supply of these things, but it's basically conflating all crypto, Bitcoin, and as being the same as the rest of the cryptos, which is clearly not. As you mentioned, the 21 million is a limit. The wallet metrics you look at, there's some others in the market. Raoul Paul, who you probably know of, Real Vision, has this theory around Metcalfe's law. That the network value is proportional to the square of the number of nodes, the users in the network. So basically, as the network grows, it obviously accelerates. I think Willy Woo, one of the on-chain analysts, looks at similar sort of metrics, and a lot of his forecasts are based on adoption. How do you look to extrapolate some of that, what you described as a lagging indicator in the number in the wallet addresses?
I like one thing I got from Raul recently, listening to one of his podcasts he did, was equating Ethereum now to Bitcoin at the beginning of 2017. Yeah, that made a lot of sense. One. Yeah, I like that. I love the stock to flow. That makes sense. I just don't need to be that big picture outlook. I mean, there are some great things. There's one thing though I want to bring in that has really I think not as widely watched, but is a significant indicator I've really kicked in for me in 2018, and that's the market cap and trading volume of Tether. The reason I bring that up is because I don't see a lot of people mention, I see a lot of pushback against it, but it's clear to me when I look at it is this is what the market wants. It wants a digital version of the dollar. If it didn't, volume on this digital dollar, which there's many of them, stable coin, would not be double right now. It's basically double the volume of Bitcoin based on coinmarketcap.com, which could be dicey, but I use apples to apples. They're the same measure, I guess. And that's what I show you here. And this is just in white. I just show you the simple market cap of Tether. And what really struck me about Tether was I was in Hong Kong 2018, major bear market, and right after the typhoon, right before the riots in 2019. And I remember major sentiment for Bitcoin. I could sense it. Everybody poo-pooed the mainland. And I remember pointing out in some presentations that everything was going down except one thing. Tether market cap was increasing. And I heard a lot of pushback, and I'm like, guys, this, as a strategist, I don't really so much care what the problem is. All I see is market caps increasing. And yes, it could be somewhat subjective, but that's what I want to show you here. We had that dip April 2019 in Tether. It was around 3 to 5 billion. New York Attorney General came down. And so since then, they have been under the radar, that they've gone from 2 to 3 billion to 33 billion in AUM, and volumes double. And I look at that as that's just in the world. People say that they want a CBDC digital currency from China and stuff. I'm like, yeah, good luck with that one. The world's reserve currency, the dollar, which has been the best currency ever for transacting, is gaining dominance through digitalization, and Tether's an indication of it. So also a key thing that might help out, because we all know it's all going digital, just a matter of time, unless people expect to go backwards, which I was trying to move forward. And that is, there's a bit of a privacy issue. I mean, if you're in China, dictatorship that's, clearly wants to track its citizens every transaction, well, you can do that with a CBDC, but with Tether, it's kind of someone else's deal at the moment. So it's like the banks, they manage the money. And so I wanted to show you one other thing, and then move on. And this is the key thing that matters to me. It's not being noted because Bitcoin makes the headlines, but in white, that's the 10-day volume of Tether. It's almost 150 billion. It's about double, almost double that of Bitcoin. It's getting closer. That's what I show you in the bottom, just the one divided by the other. So there's a key metric that I like to point out. And every time I hear people push back against, I like, that's perfect. That's what you need in this space, because when everybody agrees on something, it's too late. The market's already priced in. So it's just pushback that I like to hear, that the naysayers. And that's a thing, I'll finish with my rant. To me, that's the key thing that really shifted probably a few months ago, is all the risks tilted against the naysayer. So if you're a professional and your job is to help your clients make money and you don't get them in Bitcoin, you tell them not to get in Bitcoin and you're wrong, then that's a major push against you.
Well, I think we're seeing that with things like MicroStrategy's market cap up. I can't remember the last check whether it's 4 or 5x since the start of the year. It's kind of hard to ignore what that allocation has done to their market cap and their bottom line. I think they had 1,400 people at the recent seminar that Michael Saylor put on. So it's 1,400, corporate treasuries attend. So I think the money is speaking to the space. And if indeed you get Coinbase comes out with a market cap of 70 to 80 billion, that's larger than many banks and will definitely drive a lot of board discussions of why are we not in this as opposed to why should we touch this. I agree there's a lot of, let's call it, FUD, or basically there's a lot of concern around Tether. Extending some of the thought you described there and how important it is, what's the impact if in fact there is some sort of fraud at Tether and basically some rulings come out against them? How do you think, what happens to the market cap there? Does it shift into other stable coins? Is there some other impact?
Yeah, exactly. I think there's some. I think it's just going to get. We should expect more regulation, which would be good. More and more. Most notably, obviously, people they're from the U.S. government, because there's an argument maybe it's counterfeit, but the U.S. government I think smart enough to go in and okay, we'll just regulate this. And sure, we've already. I mean, the New York DA has been on it, so we've already had this. We've already had the shot. We've already had a direct hit. I mean, and it survived. So that's the way I look at it. Like, okay, next subject. What's the next thing? And it's NASA technology. There's got to be backups. There's got to be volatility. I'm waiting for the next one that's going to make Bitcoin maybe drop 25%. Who knows? I fully expect if and or when that happens, there'll be more buyers that are creeping in. It's just that kind of mode right now. The question is, where's the plateau? And that's the key thing, is we're nowhere near that plateau. But that's the key factor about Bitcoin. It's completely independent versus those 8,000 other ones, including Tether. They're all someone else's project and someone else's liability. The unique thing about Bitcoin, similar to gold, it's no one else's project, no one else's liability. It's been developed completely organically in the world's largest decentralized network ever. It's been through many tests, and yeah, it's going to have more tests, but the bigger it gets, the stronger it is. And if it doesn't kill you, it makes you stronger, and Bitcoin's won that race.
Indeed, it has. I mean, you mentioned earlier when we were talking about Raoul Paul's thesis that you liked his view of how he looked at Ethereum, that potentially just maybe it's the same thing, although it's earlier in the cycle. I think you put some similar research out on Ethereum. You want to talk about that a little bit?
Yeah, I don't follow it too much. I typically watch. I mean, I put out a little technical indicator, on Ethereum. I think I like his narrative. Partly because the way I view Ethereum is it's more like a speculative stock now. It's won the race already of the go-to platform for DEXs, decentralized exchanges, and fintech. But it's not going to be a global reserve asset like Bitcoin. So it's a completely different world as far as U.S. Treasuries from not just U.S. from every company in the world makes sense in central banks to allocate some to Bitcoin. But I look at Ethereum's a closer correlation with NASDAQ, and I see it similar. It makes sense that it's right around 1,800 at the moment. 1,900, just around 2,000. So it's basically where Bitcoin was at the beginning of the year. So it can have a rush, but it does have major competitors, and it just kind of won already. But that's why I like to point out when I pull up things like that, you pull up my simple little analysis, coinmarketcap.com. If I sort by market cap, you get Tether's Ethereum's number 2, right? I get it. But you do volume, and which not everybody does, Tether's number 1. So there you go. So to me, it's Bitcoin and Tether and everything else.
Yeah, fascinating. So, I mean, where do you think we go from here, broader market? I mean, one of the things one of the themes in the market is inflation, and we're obviously seeing yields rise. Real yields rise. How is that expected to impact, let's say, the flight to quality or the store of wealth that is Bitcoin?
So I'm pulling up a recent article I did. It was titled "The 21st Century Commodity Supercycle." It's here. Yeah. It's called Bitcoin, and I think that's what people are missing. So as far as inflation, let's remember what stage Bitcoin is in its maturation phase. Right now, it doesn't really matter. Inflation, deflation, whatever. Bitcoin's in the process of reaching it's in a price discovery stage. It's nowhere near its plateau, I don't think. It could easily get to the market cap of gold, which means another 10x probably, and it could go much higher. I suspect it's going to be more. Now, what's going to happen in the meantime, who knows? But the key point is we in this world no longer, I mean, the U.S., in the last time we talked about super cycles, the U.S. used to import 15% of the world's total supply of crude oil. Now we're a net exporter, and total demand for petroleum in this country and liquid fuels is the exact same as it was 15 years ago. So I point out that let's look for a super cycle in the future for inflation and everything. It's already happening in Bitcoin. It's just going to that place. But real inflation, if we want to talk inflation, a way to hedge, metals, gold, silver, platinum, palladium. And copper, maybe aluminum. You can store it. You don't have to worry about contango and things like that. And I think, gold and silver sure plays well in your part of the world, but you can't be involved in that space without some Bitcoin, the way I look at it, unless you're looking backwards. Looking forward, so to me, that's what I think. As far as inflation, good luck with that one at the moment, because deflation remains the primary source. The place for getting inflation is assets like Bitcoin, most notably stock market. The key thing is when you get to, I'm going to show you this right here, the highest right here, equities made, the highest market cap ever to GDP, US stock market, global stock market, that's what I show you in white. Okay, that's inflation, but just a little mean reversion there. What's the problem? Massive deflation, massive printing of money. So that's why I like to narrow this whole question down to one little potential inflection point, and that is the relationship between Tesla and Bitcoin. So I know we started inflation, Seamus, but I want to go there because I'll slow down and I'll tell you why in a second. But to me, this is the key thing I'm watching for that potential narrative. And I'll end on this and I'll go this, because what's been happening, as I show you in this chart so far, is since Tesla allocated to Bitcoin, Tesla's gone down, Bitcoin's gone up. And let's put ourselves forward a year from now. If that trend continues, what are the macroeconomic and repercussions of the world's most significant automaker and one of the biggest members of S&P going down and Bitcoin going up? Let's just do the dominoes. Fed eases more fiscal stimulus. Everybody's worried about deflation. Boom, it just trickles down. So let's put it this way: Tesla's got to go up, or we got a problem. And that's why I think I would love to have some good real inflation. And then I look over one simple little thing, like in this country, is I got a bridge to show you. When I go to when I catch an airplane, I come from Connecticut. I go to the airport. I go over the Whitestone Bridge. It goes over the East River and the Long Island Sound. 2 years ago, there was 100 people there would man that. Now it's all electronic. Poof, gone. These people are just gone. I used to be in trading pits. This is when you and I were in the past. Poof, gone.
Indeed.
People underestimate technology pressuring inflation forces, and we're in that acceleration phase.
Great points. We haven't had a chance to go to questions, so I'll just change the topic a little bit and go to some of those questions. I have one question here about, can Bitcoin tumble when quantum computing makes computing, when quantum computing comes?
There is, sure. It could have a problem. I've heard people address, I saw a Bitwise webinar yesterday, they addressed that. Let's put it this way: if that happens, there's probably greater risks with things like the Pentagon and the U.S. government.
Correct.
Bitcoin is, and when that happens, and to say what happens in a nefarious country that has reasons to not like the U.S., who provides security for the planet, then I think we have bigger things to worry about. For now, the Bitcoin network is quite strong. And yes, new technology could upset it, but that's what I love. Michael Saylor says, once you adopt the technology, it holds on, just like the way we're speaking right now and how email works and stuff. But to me, that's a minor thing, and I'm more worried about getting hit by a bus.
One other question: what's your view, if any, on Cardano?
No clue.
Fair enough. Okay. Well, I think we're kind of at the time limit. It's been great to chat with you, Mike. And I agreed we have to do this again sometime in person, and we'll grab a Guinness in there to celebrate some Irish heritage. So thanks for joining today. And how can people connect with you?
Yeah, I'm on LinkedIn. Just happy to link
Yep.
in, and I put my post myself. I'm on Twitter too. I just don't follow as much. I don't have time to respond. But link in with me. Happy to do that. And if I'm happy to put on my distribution list, just link in. I can get you on my list, and maybe someday you can hook up on a Bloomberg terminal, and I can get brownie points for that. But LinkedIn's great, and I'm happy to put you on my list. Mike McGlone at Bloomberg. You'll find me.
I would definitely recommend your research reports. They've been great reading. I've enjoyed them. So, Mike, it's been great talking to you. Thanks for joining this.
Thanks for having me, Seamus.
So thanks for everybody for being with us today. The next call will be on March 5th, and we will announce the guest shortly. And thanks for joining today. See you next time. Thanks a lot.